everyone, my name's Jack Chapple. I upload business, finance, and entrepreneurship related videos pretty much every single day, so hit that subscribe button if you want to see those and that like button. Now today, we are talking about why I am investing in the stock market once again. So I don't know if you guys remember, if you have been a subscriber for about 4 or 5 months now, I made this video about why I am not investing in the stock market right now. That was in like January, somewhere around there. And I gave a few reasons for that. One of which was, well, the main one was that I was starting my own business. I was really focusing specifically, it wasn't even a business, it was just YouTube. I was focusing on like setting up YouTube and some online sales stuff and getting this office space already. And I was putting in a lot of my money into setting up an infrastructure for like online business, online sales, this office space. And I had, some infrastructure set up already for YouTube and consulting work and all that. I had all that set up, but I was trying to set up this new sort of infrastructure. And, I had to pay for everything. The lights, board, camera, drone, office-based desk, chairs. It's all just kind of adds up. And advertising costs. I mean, that was thousands and thousands and thousands of dollars, and I was still saving up some money. But what I was trying to say was that, I didn't have enough money saved up to like invest in stocks full time again. But now that everything's set up, I'm going to. I can start investing again. So I'll start making some more stock videos again. Now, the second reason I gave for why I wasn't investing in stocks, in January, was that, there's a potential for a correction or a recession coming. And I said that, that wasn't the primary reason why, but it was a reason why. I believe that there is some sort of correction coming, so whatever I invested, I could lose it all pretty soon. Now, however, actually I should be writing these down. So number one was infrastructure. Infrastructure. Number two was the correction. Stock market correction. So obviously that hasn't really happened. I mean, I was saying this though. I tried to say this very clearly. I think that it's coming by the end of 2018, because I said that there's usually one every 10 years. Right? Right now we're in year 9, and next year would be year 10, which should be the latest time that a correction would come. Because I think the one in 2008, that was, 8 years? Then in the 90s, it was 10 years. That was the longest one. So there should be some sort of correction coming. Now, here's what I want to talk about. So I know that this is probably really bad timing to start investing in the stock market again. I do realize that. However, I think I made this video already. It's when's the best time to invest in the stock market? So we're gonna go here. We're gonna do a chart here. Here's time at the bottom here. I don't know if that's gonna fit on camera. Hopefully it should. Yeah, it'll fit. So here's time, and then here's, value of the stock market, okay? Here's time, and then here's value. So, we've been going through this growth period for a long time now. We've been going through it for about 8 years, 9 years now. And so theoretically, we could be at the peak. We could be at the peak, and then within the next couple months, there could be a downturn, right? Let's just say we are at that peak right now. And I start investing right now, and tomorrow I lose everything. I've already invested, actually, I think yesterday I put about $3.5 grand into investments. It was just a nice start. It was like $3,500 or $3,000. It was something like that. I actually talk about that more on my online membership site now. It's in my VIP program. You can go check it out in the link below, stock program. Go check it out. I talk about what I invested in and stuff. So theoretically, we could be at the peak right here. However, if I were to lose all that and the stocks were to lose all their value for 6 months or 1 year, we do know that from history is that they're going to rebound. And over time, my investment will be worth more than before if I hold on to it for long enough. Now, usually this takes anywhere from 2 years to 5 years. It depends on what your investment is. Now, sometimes you get a BlackBerry and it just never rebounds. By the way, BlackBerry is a stock that I've been looking at a little bit recently. Why am I on that side? You guys can't see me. BlackBerry is a stock that I've been looking at a little bit recently. And same with maybe I should make a video on that. Stocks that I'm actually interested in looking at, BlackBerry and home there's actually a mortgage company that went kind of belly up in Canada here, and the stock price got cut down by 95%. And I'm looking at it. I think it's called Home Capital Equity or something along those lines. But I'm intrigued. I'm intrigued by it. So what I'm trying to say here is that even if we're at the peak of the market, if you're a young person, which most of you are, then it's still a good time to invest. If you plan on holding on to the stocks for a long time, if you plan on holding on to them for 5 years plus, then it's a good investment now to make. But if you're doing the swing strategy and you're planning to invest for only 1 year and then sell it off, or 6 months and then sell it off, it might be okay still. That might work out for 1 year. It might work out. But maybe it doesn't, and maybe that's not the best strategy you should use to invest. So, anyways, those are the two big reasons why I'm investing. Right? Again, is that because it's always a good time to invest. I mean, a stock market crash only lasts 2 years, and as long as you don't sell, you're going to be fine, unless your company goes bankrupt that you've invested in. But I've picked pretty safe ones so far. Yeah, and then infrastructure. My infrastructure is already set up. I mean, what about you guys? What's preventing you guys from investing right now? Here's what I want to ask you guys, because I know that there's, I've been kind of saying it too, that there's a lot of fear about investing right now. There's actually two things that I've seen online recently, was that you got the people that are seeing all these great returns from the stock market that have happened in the past 8 months or so since Trump got in. It's been 8 months, no, 7 months. When did he get in? November? That's when it all started rebounding again. So you got those people who are like, oh, these returns are great. Now it's time for me to jump in. But yet they don't know the boom bust boom cycle. I mean, we see this every 6 to 10 years, guys. Every 6 to 10 years, it's the same goddamn thing. And people think it's, I got some other people out there that I've been watching on YouTube that, they always say, there's no signs that this economy is going to slow down anytime soon, not in the next few years. It's going to be completely sustainable. And it never happens. We have hundreds of years of data to back this up. Just economic growth only lasts for, 6 to 10 years max, and then it takes a downturn. It's so consistent throughout history, just no one, So you got those people that believe that times are going to be good forever, right? And then we always see stuff like this. Where's my eraser here? We have a towel here. I mean, throughout history, there's a few problems. We see that people start borrowing a lot of money in times like this right now, because people think that times are good, and they're probably at a job which has been paying them a lot more in the past 5 years because times have been good, and maybe their businesses are doing good, so they borrow more money, they over leverage themselves, they get too confident, and then eventually there's a slip up. We saw this in Canada recently. There's a slip up where one person can't pay their mortgage, their debts, their credit cards, their business loans because they over leveraged themselves, and so they can't pay back the mortgage company. And then the mortgage company starts losing money. If the mortgage company starts losing money, and it hits everyone. All rates start going up, and then everyone else can't pay their loans because rates start going up, and then people lose their jobs, and then people can't pay for stuff, and then the economy collapses and the stock market crashes. Happens all the time. This is the cycle throughout history. It's super simple. Growth, crash. More growth, crash. More growth, crash. More growth, crash. And it just happens all the time. Now, some of these crashes only last a few months. Some of them last a few years. Some of them cut GDP in half. Some of them cut it by 10%. Some of them cut it by 5% or 3%. But it happens. It happens. So what I'm trying to say here is that you got those people that think it's going to last forever, and it doesn't. And then you got the people that are all like Peter Schiff. Now, Peter Schiff, I listen to him. He has a great podcast. He talks a lot about interest rates and the Federal Reserve and gold. He's a big gold investor, and he's a multimillionaire. He's probably I call them centimillionaire, right? When they have over $100 million in net worth. He's probably somewhere around there, I would guess. And let me just erase this here. So he is on the opposite end of the spectrum. He always says that, maybe I should just move this chart over. That would make things a little bit easier. I'm right-handed. There we go. That's a little bit better. So Peter Schiff, what he always thinks is going to happen is, he thinks that there's always more crashes than there is growth. He's just like, it's always going to crash. It's always going to crash. And he says that anytime that there's economic growth for more than a year, it's time for a recession or a stock market crash or correction. He thinks that the country's going to go belly up and that although the next crash could be bad, I don't know, the next stock market crash could be bad or the next economic crash could be bad. It could be mild. We don't really know, but he always thinks it's going to be the worst one in history. And if you bet bearish for long enough, you're going to be right. So he's always very bearish. He always says that the market's overinflated. I think it is overinflated right now, though. I will agree with him on that. Is that maybe we should talk about stock prices right now, PE ratios. Sorry, this is just more of a laid back, like, I'm kind of back video. I haven't actually made a whiteboard video in a while. It's been a couple weeks. I know I made a bunch at one time, so you guys probably haven't noticed, but I haven't really done a whiteboard video in a while. And so here's what I've noticed specifically about the market right now, is that there's these things called PE ratios, and they're price to earnings ratios. So usually what happens is, I don't know how I'm going to show this on here actually. Oh, the board's still wet. So usually what happens is a company has earnings. A company has earnings. Let's just say it's $1 per share, like Amazon. I think, Amazon's actually at $5 per share. They went way up this quarter. But it's pretty much profits per share. So for example, you have a $100 stock and the company earns $1 for every share, then it's $1 per share. That's like earnings per share. It's a little bit more confusing. I explain that a little bit better in my program. But what we're seeing right now is people are willing to pay astronomical amounts of money for very little earnings, if that makes sense. So you can have, I'll give you an example here actually. Oh, why is this board not working? But let's just say you have what used to happen back in the day, like 6 years ago, was that you would have a company earning, I don't know, we're going to do nice round numbers here, $5 per share. That was their earnings per share. That's pretty good. Well, it depends on the company, but that's pretty good. $5 per share, and they would have a stock that's worth $50. So they'd have earnings, $50 per share earnings, that's E, and $50 price per share. But now what I've noticed about this market specifically, which is a little bit worrisome, is that we're having stocks that are, without exaggerating, that have $1 per share earnings. So you have $1 per share earnings, and you're seeing prices of, I'm not kidding, of like $180 per share. So what does this mean? It means that people are paying a lot more money to invest, period, in some stocks. So right now, Amazon's PE ratio, so for example, their stock is selling for $1,000 right now, roughly. $1,000, but their earnings per stock, their earnings per share is like $5. Roughly $5 and some cents there. So their PE ratio was like 190. Meaning that for every $190 in price, they have $1 in earnings, which is not good. I mean, it means that people have a lot of confidence in Amazon and are willing to pay a lot of money to invest in them, but it's overinflating the entire market. I mean, we're seeing this, like Google's PE ratio used to be like 15 or 20, I think, and now it's like 34, 31. We're seeing this across the board for all stocks. PE ratios are at an all-time high. It also means that it's like fake growth. The stock market doesn't always tell you how well an economy is doing. There's lots of factors. Right now, the stock market's been on fire for the past 6 months, but yet that's not really showing too much in terms of whatever measurement you want to see, GDP, unemployment. Although unemployment's pretty low, but they use warped statistics for that. But so that's why I'm worried right now. I am investing right now. I'm going to invest. You guys probably should too, because I know a lot of you are young. You're going to be fine. If you invest for 5 or 10 year periods or more, you're going to be completely fine. You're going to make lots of money. Trust me. However, I'm just saying that prices right now are very inflated. There's not a lot of new businesses becoming public, and the ones that aren't very good. I mean, what have we had in the past few years? Twitter, GoPro, Snapchat. What other IPOs have we had recently? I'm not quite sure. I think Blue Apron is going to go public. Saudi, oh yeah, that's the other thing too. Saudi Aramco, that oil company. Saudi Aramco, that oil company, which might be the most valuable company in the world, they're going public, theoretically, or supposed to be going public. There's a lot of hurdles. But they could be the largest company in the world, and they're going to go public. They might be more valuable than Apple right now. Very, very interesting stuff. So these are, I think that this video is a little bit long. I think that should probably wrap this video up. I mean, this is why I am investing in the stock market again, but I'm also a little bit nervous. I'm also realizing that everything's overinflated. We could have a big crash coming in the next 6 months to 18 months, but we might not. And even if we do, in 5-10 years, we're going to be fine. So that's why I'm investing today. What do you guys think? I think that's going to wrap it up. What do you guys think? What do you guys think of my reasoning? Do you guys agree with me with what's going to happen in the market? Do you guys agree with investing for the long term like me? Do you guys agree that investing now or investing period is better than not investing at all, even if there's a downturn? Anyways, so thank you very much for watching. I'm going to make more stock videos hopefully soon and start uploading them onto my channel because I'm getting more interested in the market again. And I think that's going to wrap it up. So thank you very much for watching. Check out my stock market program if you want to see me talk more about like breaking down stocks. Like I did a breakdown yesterday actually of Google versus Amazon stock and which one would be better because they're both at the $1,000 mark right now. I don't know if you guys saw that, but Google and Amazon both hit the $1,000 per stock mark, I think last week, 5 days ago, a week ago. So I said, like, which one do you prefer? Google or Amazon? And I gave a nice breakdown of what I prefer and plus some other stocks that I'm buying. So go check that out. That's on my website. You can go sign up. You get like $200. You get essentially $197 program for free. I'm throwing it in there. My Wealth Accelerator program if you guys sign up. And yeah, so go check that out. Get lots of stuff for free and it'll really help you guys out with stock market, with business, building a side business, investing, and so on. So I'd like to thank you very much for watching. You're all very beautiful people. And I'll see you guys in the next video.